October 19th, 1987. This day will forever be remembered in the financial markets as Black Monday. At that time, it was the worst and most severe global stock market crash in history. While investors around the world were panicking and trying to mitigate their losses, one trader was preparing to put on one of the greatest currency trades ever made. This one trade made over $300 million in profits. So in this video, I'm going to share with you this trader's strategy that you can still apply in today's markets and show you step by step how he used his knowledge of a country's currency to generate massive profits. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In my videos, I profile all the top traders in the world and teach you how to replicate their incredible success. I've been fortunate to train many successful traders, and in this video, I'm going to talk about a trader who gained legendary status when he pulled off one of the biggest trades in the currency markets. His name is Andrew Krieger. Andrew was a 32-year-old trader who gained a reputation amongst those familiar with big market trading as one of the most aggressive traders at the time. His trading style was ruthless and high risk, but it managed to serve him very well with big results. In fact, in 1987, he made a name for himself by breaking the New Zealand Central Bank when he made over $300 million in one day for his employer at that time, Bankers Trust. His employer treated him like their most prized asset, as Andrew consistently made big money for the firm. As a result, they fully supported and backed him on many of his big size trades. For example, his trading limit was vastly increased to $700 million, which at that time was equivalent to billions of dollars in today's value, and was one of the reasons why he was able to pull off his massive currency trade. Also, just to kind of give you some context how much confidence Andrew's employer had in Andrew, $50 million was the normal limit for most traders at that time. Andrew at its core is a fundamental analyst in the currency markets and was very good at being able to identify the valuation of currencies around the world, and more importantly, identifying capital flows. Now, these skills would serve him very well and up to his career-defining trade. The Black Monday Massacre, or also known as the Crash of 1987, took place on October 19, 1987. This was a day that global markets around the world suddenly crashed, and the US stock market dropped by over 22%, which is by far the largest one-day decline in history. Now also, this was one of the most severe and unexpected stock market crashes ever, and sparked fears of a Great Depression. Now, while traders and investors were panicking all around the world, Andrew saw a huge trading opportunity. Now, in the weeks leading up to the Black Monday crash, the US federal government had released news of a widening trade deficit, which roiled financial markets and weakened the US dollar. Now, the move away from US denominated assets like US stocks, especially after the crash, further weakened the US dollar. With the US dollar plummeting in value, funds with big money were looking for a safe place to store their funds until the crisis was over. So many fund managers were rushing to put their money in foreign currencies, which they believed would hold its value better, and as a result, suddenly other smaller currencies such as the New Zealand dollar, which we know as the Kiwi, would become a hot commodity. Now, however, Andrew reasoned that these smaller currencies will suddenly become immensely overvalued because of this rush, and in his opinion, there was no way that these small countries with much smaller economies than the US could sustain such outrageous prices. His trading thesis was he believed that the Kiwi was artificially inflated and vulnerable to a collapse, and this was when he took immediate action. If you're a currency trader, There's two ways to profit from the fall of a currency. One is you can short a currency, which means that you believe that the currency will go down relative to another currency. So for example, since Andrew wanted to short the Kiwi, the simplest way for him to do that is to take out a loan in New Zealand dollars that he will be able to pay back at a discount as the New Zealand dollar devalues relative to the US dollars that he holds. But this way is too slow for a forex trader who wants bigger profits. The main reason is currency pairs typically don't fluctuate that much. So the second way is traders utilize leverage to build up their positions, and in this case, Andrew utilized option contracts to build a position against the Kiwi worth hundreds of millions of dollars. So let me explain to you what option contracts are. They are agreements between a buyer and a seller which give the buyer the right to buy or sell a particular asset at a later date and at an agreed upon price. So it's different from buying stocks because you don't actually own the stock. You're just really buying the right to buy or sell. So what Andrew did was Andrew bought puts contracts. So put contracts give you the right to sell an asset at an agreed upon price. So Andrew paid what's called a premium, which is the cost of the contract to be able to sell his New Zealand dollars relative to the US dollar. So if the price fell after he bought the puts, then he would make money. With his aggressive approach, he used his vast purchasing power within the banker's trust, with reports of him leveraging up to 400 times his capital to accumulate a massive position that the Kiwi would fall in value relative to the US dollar. So here's a chart of the New Zealand dollar versus the US dollar. And this is from 1985 to 1987. So first of all, I want to give you a much bigger picture point of view. So you can see here, starting in late 1986, the New Zealand dollar versus the US dollar has been very, very strong. You can see here, all the way very, very going up. And you can go down here and go up here. And what I want to highlight is especially this part here, okay, in late 1987 when the markets crashed. So let me zoom on in this area in the next chart to show you exactly how Andrew profited from that trade. So here's another chart of the New Zealand dollar versus the US dollar, which I have zoomed in. Now this is from October 1st, 1987 all the way to November 21st, 1987. And on this chart here, I want to highlight where the Black Monday crash happened. Basically, it was right here, okay? And you can actually see that the Black Monday crash actually caused the New Zealand dollar versus the US dollar to drop as well. Now, Andrews basically started buying his short position basically around here. He started buying about $50 million worth of put options at a time. And as the price went higher, he basically started buying additional $50 million in put option contracts in increments. Now you can see here, as the price went higher, it was going against him. One thing to note is that he didn't waver in his trade position because he believed in his thesis. So throughout this period of time where the market was basically going sideways, he basically kept testing the market to see if there was any weakness in the Kiwi by slowly adding to his short position. And finally, at the end of October, he sensed weakness, and this was when he started becoming very, very aggressive. So particularly right here, when the New Zealand dollar versus the US dollar really started declining, and basically it broke this psychological support level. So instead of adding $50 million at a time, he basically started adding 100 million or 200 million at a time, to a point that there were reports that he was holding a $1 billion position against the Kiwi. And then also here around the 62-cent mark here, this was also when he became super aggressive in adding to his profitable trading position. So Andrew, with such a huge position bet, he was basically at that time, he was trading with more New Zealand dollars than the country actually had in circulation at that time. and this is basically immediately tanked the Kiwi. So it was really when the Kiwi broke down below the 62 level, basically right here, and you can see the drop from here all the way to here. This was a 5% drop in just a matter of a few hours. Now, as you can see here, the Kiwi basically recovered, recovered right here, and this would actually lead Andrew to exit his profits, and this would actually end up making him well over $300 million in profits for the firm. And at that time, that was one of the biggest currency trade profits in history and gave Andrew legendary trader status. However, it wasn't a happy ending for Andrew, as he was only given 1% of the trade's profits, which was equivalent to around $3 million. Now, Andrew apparently disgusted with his low payout led to his departure from Bankers Trust shortly after the trade, and he would actually end up working for billionaire George Soros, who I will be profiling in future videos. Even though we don't have hundreds of millions of dollars or even billions of dollars lying around, we can take some lessons from Andrew that you can apply to your own trading. The first lesson Andrew wants to teach you is it only takes one. Andrew's career was defined by one incredibly successful trade. He was not able to duplicate that type of success or trade ever in his career. You can sort of say that Andrew is a one-hit wonder, and quite frankly, that's fine. It only took one massive trade to help him achieve legendary status. And as I said in my previous videos, very few traders can achieve massive success year after year. But perhaps this is something that should give you hope that you don't really need to have many successful trades to become wealthy. If you can capture one big opportunity in the financial markets, then that can give you financial freedom for the rest of your life. Now, obviously, there's no guarantee that you will be able to capture that one big trade in your lifetime, but if you do, it will change your life. The second lesson is when there is fear, there is profit. Andrew took advantage of fear in the markets due to events happening in the world. A perfect example is how the financial markets reacted to the COVID pandemic in 2020 and what happened afterwards. So instead of reacting to chaos or feeling depressed, look for opportunities where something is mispriced due to an exaggeration in the markets. And as we've seen in many stock market crashes, the markets generally recover afterwards and if not exceed their post-crash highs. The third lesson is be aggressive when you are right. Andrew didn't build his billion-dollar position in the currency markets in just one trade, nor did he take huge risks or gambles. Now, he was definitely aggressive, but only when the trade was going in his favor. He started off by slowly building positions and testing the market to determine its weakness or strength. Then once he got his confirmation, then he would aggressively add to his trades. Now also, he tended to be early on in terms of a lot of his winning trades. So in the beginning, a lot of his trades weren't working or in the losses. So he had to manage his risk properly. Thanks for watching. If you like this video and want to watch other videos where I profile the top traders in the world, please go to my playlist under Top Trader Profiles. Also, if you wouldn't mind, please smash the like button for the YouTube algorithm, hit the subscribe button to watch more videos like this, and hit the notification button so you'd be notified of future videos where I profile the best traders.